Hello everyone, this is Prerna from Al Circle. Today we are yet again in front of you with the 10th episode of Breakfast with Jorge to discuss about the metal and oil prices. With us we have Mr. Jorge, the LME expert. So good morning.
Hi Paran and hi Al Circle, hi India, how are you? Well, as you always ask me, but this time it's just a coffee for breakfast. Um, it's here 8 o'clock in the morning, and I am in Chile now, Santiago de Chile.
Oh, that's great. So you have been to so many countries this year.
Yes, indeed, I've been to different countries this year. So let me tell you, I've been delivering educational seminars and conferences. But you know, as you say, I've been in, I guess, 6 countries. I've been in at the United States. I've been to Spain. I've been to India. I've been to Canada. I've been to Mexico and in Chile and in Argentina. I think it's 7 additionally.
Great.
Wow, it's a lot. It's really a lot.
Okay, so what about the economical situation in so many continents?
Yeah, on the world situation, yeah. So, I'm not doing tourism, but I'm delivering conferences. So, once you go in every single country, particularly during this war in the Middle East, and in regards to commodity, which is our area of studying, uh, of course, you see everywhere the price of the gasoline is going extremely higher, uh, huge, perhaps 20% or more. Um, but the common fact, it's a good question you made me, because the common fact there is that you can't see any sort of recession, neither in India, where I've been, in Europe, or North or South America. You really don't see signs of an economy like immediately shrinking due to the fact of the higher oil prices, which brings me to understand that regardless people can afford that, um, there's no perception of a recession coming. I'll tell you, compared to the situation I have lived and seen, not in the pandemics, but in 2008, 2009, when we had this interest rate crisis, and the United States almost collapsing. Um, no comparison. So I mainly don't see any factors driving to any sort of recession.
Okay, so tell us about the oil and other prices.
Well, in terms of oil and metal prices, I mean here I would say again the oil, the nearby prices, which today is doing. Today is Friday, April the 17th, in the morning. The prices are back in the area of $90. But there are two things to underline here. One is that we still see backwardation, which means while you see today's prices in the area of 90s, if you go to June, July, August, September, all the prices come down every month to the area of 70. Yeah. And we are getting closer to the area of 60 something, which is where the oil has been before the war. So, in terms of market expectation reflected in the oil prices, I would say that everyone is expecting that the war to finish, not so dramatically in the short term. The adjustment to bring the prices down again, it's going to take a, I would say 1 or 2 months, perhaps more. It's not immediate. And again, as we said the last time, it was a huge, big opportunity for the airlines, for example, to demonstrate that they were hedging, and if they were hedging, they could have avoided translating the increase of prices to the tariffs. But again, some airlines, I imagine, even though they're hedging, if their colleagues are competition is increasing the prices, they could have made both increasing the prices and be beneficial of the hedging. Because we remember here the point is that when an airline hedges, they are protected against the higher price of the tariffs, but the cost. But again, in a free world, they can do whatever they want. Yeah. And as far as other prices, it's amazing. We are seeing the aluminum going to new highs. Which aluminum is the metal that mainly brings us together, all circle. But anyway, the aluminum is still in the area of 3,600 with backwardation, which means that the nearby prices are higher than the long-term prices, but still the long-term prices are high. What I perceive is that the price of the alley will stay there, perhaps in the area of 3,500, 3,600, but staying there. Perhaps the backwardation is gonna stay because there has been a real damage on the plants in the area of the conflict, and we are speaking of say perhaps 7 million, 7 million tons, which is huge, which is a lot as a disruption, and at the same time the consequence is much higher demand on recycling, which I see there a very hot market, and people willing to pay more and more for recycling, in particular the aluminum. As far as the copper, we see stable prices on the copper in the area of 12,300, which is still very high. And since I am now here in Chile, I can give you some impressions on copper, if you wish.
So, what are the expectations?
Yes, absolutely. On copper, I would say that surprisingly, the companies here are so positive in their view that they might hardly hedge, which is to fix the price at this present level. I have to guess, but if I guess, I would say that they are expecting the prices to stay stable, to go higher, and this is all on the basis of a clear expectation on the electrification of a non-stop process, growing, growing, and growing. And of course, in addition to the electrification, you have the artificial intelligence demanding more and more and more. Um, you know, we've been saying that for the last 2 years. The demand of the artificial intelligence is directly linked to the demand of copper and alloy. So this is a very, very bull market and very strong market indeed.
So, as always, what are the learnings?
Well, as always, as far as the learnings, what I would say that again and again that we live in a very volatile market. It's like the roller coasters of the past. The roller coasters of the past 50 years ago were nothing in terms of the complexity on the adrenaline they were creating. Very simple, while today's they are much more complicated, and this is exactly the reflection of the demand of the human being, of adrenaline, of volatility, and this is it. So I strongly believe that you should continue to hedge positions, perhaps to use options in case you think that you have a better alternative at the time of hedging, and mainly that's it.
Okay, thank you so much, Jorge.
Oh, thank you very much for this new opportunity. And I'll see you next breakfast with Jorge, which is breakfast with me at, let me think, United States. Take care and see you in a couple of
Thank
weeks.
you so much.
Bye-bye.
Thanks, everybody. So, hereby we end the 10th episode of Breakfast with Jorge. Stay tuned for us and drop your comments about the market prices in the comment section below. Thank you.